Hey everyone. In today's episode, I'm going to discuss things to know before buying in Victoria. It's probably one of my most, I'd say, probably important episodes that I've probably done because Victoria is just going quite ballistic with the amount of people that are buying there and looking to get in the market. So the reason for doing today's episode is because I think a lot of people need to know what they're getting into before just pulling the trigger. And it's very important. Look, I obviously run through all my clients this, but I don't think a lot of people even think about this before they go to look to buy in Victoria. So look, in today's episode, it's going to be pretty simple. I'm going to give you a couple of things to know that are good and a couple of things to know that I wouldn't even say are bad, but just things to be aware of in Victoria. So there's no specific exact structure. I'm just going to say one thing to realize and another thing that's good about Victoria and what's going on. It's as simple as that. So the first thing I want to discuss is just the minimum rental standards. So the minimum requirements from Consumer Affairs Victoria, basically. So a lot of people don't know what really this is, but it's very simple. There is a list of basically requirements for a home or dwelling to be rented out. You can Google this and it will come up straight away what they are in terms of the minimum rental standards. However, what I'd say to people is the three main ones that probably will fool a lot of people or people won't consider is, first of all, it's heating, cooling in your central living area. So generally that can be done by an aircon or possibly an older, should I say, even wall aircon or something like that as well. The other one is you do have to have the kill switch on your actual, should I say, electrical box. That's another one. And a final one is no gas leaks in the actual, should I say, main gas lines. And that's generally with your, should I say, hot water system. Most are gas, some are electric, and also your stove, which is also often gas as well. So for anyone buying in Victoria, this is just really a heads up. Whatever property you buy, even if it is new and turnkey or fairly newly renovated, I would always leave somewhere between $2,000 and $3,000 into buying any property in Victoria, simply because even if it's got the right kill switch, even if it has the, should I say, an aircon in the central living area, and even if it has obviously a working stove, there may be something that a compliance officer, should I say, might bring up. And because of that, you are probably going to have to just get that fixed to get it leased out. So that's a key thing. Look, generally your electrical and gas will last 2 years, the actual compliance check standards. You need to do smoke alarms every 12 months. So that's pretty standard across most states. Should I say, property managers make you do that. But that's three of the main ones for the minimum rental standards that a lot of people don't know. In saying that as well, there are a number of other ones, but mostly these three are the big ones. All the other ones are very kind of simple. Like, I mean, you could probably go in the house, tidy it up, put some WD-40 on, maybe should I say, window that might be a bit firm to release or something like that. But these three things are the main ones. So just again, it's heating and cooling in a central living area. It's your gas, no gas leaks in the gas line. And it's also that you do have to have the kill switch on your switchboard on your electrical box. So just keep that in mind. They're pretty simple, but when you invest in Victoria, that's what I would do. I'd leave a couple of $1,000s just to spare, just in case. Look, a thing I want to go into now is a thing you need to know before buying in Victoria as well is it's incredibly cheap in comparison to other suburbs. So I'm just showing you the top end of Sydney and the top end of Melbourne. On the right here, you have Bellevue Hill, which at the time of showing this, it was $10 million, the median price. It's actually closer to 12 because the data's a bit slow. But anyway, let's just call it $10 million. And Albert Park was 2.3 at the time. Now, again, Albert Park at the moment is probably about 2.4 to 2.5. But you can see there, I mean, Bellevue Hill is basically Sydney's very top end of the market. I mean, it is probably, I'd argue, the wealthiest suburb alongside Point Piper in all of Sydney. And Albert Park is also probably, along with Chirac, I'd say, which is more expensive, mind you, but Albert Park Chirac is the Point Piper, and Point Piper is like $20 million. So that again is more than 4 times the price. But Albert Park is probably comparable to somewhere like Bellevue Hill in, should I say, Sydney, and Albert Park is like a quarter of the price of it. So this is quite common across all of Melbourne, I'd say. You got a lot of suburbs that are just so underpriced compared to what they probably should be that it is ridiculous. And you can even compare these to, the top end of Brisbane, the top end of Perth. Like, if you compared that to Peppermint Grove is like $4.5 million. Tenerife, New Farm are like $3.5 to $4 million in Brisbane. So, this is like half the price of even them, which is just insane. So, what we've got here really is a market anomaly of Melbourne. These suburbs usually aren't this cheap. They're usually fairly comparable to, should I say, Sydney suburbs. They're generally only 20 to 25% cheaper. So it is extremely cheap, and you've got some of the best opportunities at the moment especially in Melbourne. Even other parts of Victoria. If you compare Newcastle and Geelong is incredibly cheap compared to Newcastle, and it is very much so a comparative city as well. So that's another thing that we could just consider in that regard too. Look, another thing to know is Victoria does have quite strict tenancy laws as well. So the thing I want to mention is, look, all states have tenancy laws, no doubt. All states do have, to be honest, they actually are fairly similar if you look at it on a molecular basis in terms of what they are. Just Victoria's are quite strictly enforced. That's just the thing I'd say. And there are some other laws that have been changing over time. So, the thing with Victoria that people need to know is your notice to vacate used to be 60 days. As of releasing this video, within a week or two, it will be 90. So that's just something to be aware of. VCAT and should I say Consumer Affairs Victoria, they do tend to be honest with you, out of all the states, probably tend to take the tenant side a lot more than I'd say the landlord side in the way they look at things. I'd say think of it similar to Fair Work with an employer to employer. That's how I'd probably describe it, similar to something like that. But in saying this, it's not something to be overly scared of. Like, if you got a good property, you set the standard with the tenant quite well and it is compliant, which, that's actually a good thing. You're probably not going to have too many issues. You will have to be a bit careful about the property manager you select, though. Some are a lot, should I say, more, I don't know if this is the right word, but poignant, or maybe possibly even, right on, to the point of exactly what it needs to be. So that's just something to be aware of. There are certain areas of Victoria that I'd say tenants are a little bit more relaxed, and other areas where they're a lot more strict and stringent on it as well. So Victorian tenancy laws, just have a look at them. It's nothing to be scared of, but just be aware of it before buying into Victoria. That's all I'm saying. Council and water rates are very cheap. Now, why am I saying this? Now, I don't mean to offend, obviously, anyone in Victoria and even Melbourne, Stonington, an actual, should I say, more expensive council region. But compared to other states, these are very cheap. So I'll give you an example. Places in, should I say, Melbourne's inner west, the council rates are like, for a fairly good place, like $550 a quarter. Water rates are generally something like $200, maybe to $250 a quarter. Now, in New South Wales, this is in Newcastle, in a good suburb, they're about $3,000 a year. So that's about $700 to $750 a quarter, and the water is about $1,200 a year to $1,300, so it's about $300 to $350 a quarter as well. So you're saving significant money on just buying in Victoria with this, and Victorians aren't going to like that. And yes, I agree it is overpriced still, but it's not as overpriced as other states. In North Queensland, a lot of their water and council rates are above $4,000, to give you an idea, because of the council levies, flood levies, and all the other crap they actually have to pay for. So, in Victoria, I actually think the council and water rates are extremely cheap. Now, sure, it might not be cheap compared to, I'd say maybe some parts out of Perth and probably Adelaide either. But especially compared to Sydney surrounds and Brisbane surrounds and North Queensland, you're probably saving $1,000 a year just on these rates if you add them together and then minus it from adding the other two set together as well. Easily, I'd say you'd easily save $1,000 a year. I to my comparative Victoria property to my comparative New South Wales property that I've got, I would say it'd be probably above $1,000 in most circumstances. So it's not all the be all and end all. A lot of people make out a lot, things to be a lot worse than they are, but I think council and water rates, especially in Victoria, are extremely cheap, in my opinion. A lot cheaper than New South Wales, that's for sure, and a lot cheaper than Queensland too. So that's another thing to be aware of in Victoria. Let's get into also just the land tax. So this is probably the most spoken about thing in Victoria, I'd argue. The government, don't get me wrong, this is just literally off Revenue Victoria, the State Revenue Office of Victoria. This is just for personal names and company, that's trading company names. So this is your brackets. You don't pay land tax on your actual principal place of residence, but you do on investments. So look, you can see most properties there you are going to be paying land tax on. I'd argue most you're paying probably somewhere between probably the $1,000 mark or so, and probably, the $2,000 mark for most properties you'd invest in Victoria. Look, it's not the end of the world. Again, like $1,000 to $2,000 when you're saving, like, let's say, $1,000 in council rates, is it really that big of a deal? No. Now, do I agree with this at all? Absolutely not. If the government gets themselves in a debt like they have in Victoria and stuff the economy, it should be on. They should have to, in my opinion, if a politician does that, they should have to sell their house to fund, and every other politician in their actual, should I say, party to fund the actual thing that they've done. How would that be? That'd be interesting. I wonder how they'd manage the country if they had to do that. But anyway, not to make this political or anything, but that's the thing of land tax. Yes, you do pay it, but is it? Look, if you're buying something to make money out of, what you're doing is it's a net cash flow or a net return you're actually doing. And yes, this comes off your gross to get net, no doubt, but it's not really the end of the world. Like, land tax is still a tax deductible thing, and especially if you're on above, 120,000 a year, you're paying effectively. Yes, you have to pay it up front, but you're paying effectively 60% of this, so it's not too bad. A lot of people shouldn't really stress it. It's pretty nominal. I think it's pretty fine. I wouldn't worry too much about it, and especially, if you're someone who's looking to make hundreds of thousands, if not millions of dollars, over 10 years, let's say $10,000 to $20,000 going to make that much of a difference. If you can make an extra 300, probably not. So, but anyway, that's just something to be aware of. These are your brackets in Victoria. That's your personal name. Trust is a little bit higher, so just be aware of that too. So that is land tax in Victoria. Let's get into another thing. And a lot of people don't know this, but Victoria, and specifically I'm talking about Melbourne, is actually Australia's best historical performer. So just in this graph here, you'll see this is the highest growth regions of the past 30 years. So it's between 92 and 2022. And you'll see just inner Melbourne absolutely dominating, should I say, the top of these areas. It's pretty much everywhere within, I'd say, a 10, 15K radius of Melbourne CBD is absolutely dominating this area. So, you've got, to give you an idea, you've got 4 regions alone, as in Yarra, Melbourne City, Boroondara, and Maribyrnong, that are all above 700% growth in the space of 30 years. So, and then you've got, another, 6 or something areas of Melbourne that have also done above 5 or 6 that have done above another 600% there. So that's just incredible numbers. So it's actually, despite what a lot of people think about, should I say, Sydney compared to Melbourne on a percentage basis has actually outperformed Sydney over the long term. And this is including, even if you include the recent boom of Brisbane and Sydney going up slightly more than Melbourne, Melbourne has still far outperformed all these other areas. So you'll see there, Sydney's got about 5 or 6 different areas there too, but Brisbane's only got 2, to give you an idea. Just the inner city, which is sort of the inner north and inner city, and then the inner east of Brisbane as well, which are the 2 areas I say to buy in Brisbane. And you'll see just Sydney around the CBD as well. So, that's just some incredible numbers to give you an idea. Not a lot of people would know this, but it's something to consider because, funny enough, with a lot of people being anti-Victoria, it's often in the middle of, should I say, the firefight, or when everyone doesn't want to buy that, it really presents its best opportunities. I would argue Melbourne is actually even a better buy, probably, I'd say, 6 to 12 months or so ago. It's already 3 to 7% off the bottom, depending on where you are, to be straight honest. But that's just the reality about Melbourne. This is where it really is at. And it is by far the best buy in Victoria and the country, if not. And Geelong's another good example of that. If you can be within 5 to 7K or so of Geelong CBD in a set suburb, they're probably going to do similar numbers with some of the top end of these, should I say, percentage basis over the next 30 years as well. It's completely realistic to think they're going to do that. So that's another thing just to consider about Victoria. There is some incredible opportunities, and Melbourne especially. I mean, it is literally the best historical performer in Australia. So it is going to revert to its long-term trend. It's not a matter of if, it's a matter of when it does that. So that's just something to consider as well. It is Australia's best historical performer. The other thing a lot of people don't understand is, despite Melbourne being a very good historical performer, there are absolutely consistent mortgage-stressed suburbs. Now, this isn't very long ago, so this is just the June quarter of this year of 2025, and you'll have the worst performing postcodes for mortgage arrears. And now I'm just going to read out all the ones in Victoria, and there's 6 of them here, right? Fountain Gate, Point Cook, Craigieburn, Cranbourne, Pakenham, and Hoppers Crossing. So what's common about all of them? All of them are literally new estate suburbs, and suburbs that are very, very newly built and surrounded by land. How many times do I tell people, do not buy in a new estate? They are absolutely garbage. Do not buy in an area where people cannot afford their mortgages and all that kind of... And these suburbs don't have public housing either. So the thing about this is, people will say Bateau Bay and Cambridge Gardens. What this is doing is, it says most likely to fall behind on mortgage repayments. Now, the thing about this as well is that Bateau Bay and Cambridge Gardens have public housing. So what's bringing them into it is because of the public housing. So do some parts of Cashula, but it's also the units in there. But all of these Victorian ones are all new estates, and they're new suburbs. They don't really have public housing. You can see there as well, it says Fountain Gate as well as Narre and Narre South. It's right next door to it. So these are new estates in low socioeconomic areas, and areas where it's all first home buyers and unknowing investors that are buying here. So I mean, you don't have to literally, get offended by what I say when I'm smashing these areas, because I do all the time. Just look at the data and look at what the stats actually say. So, I mean, if you got this happening and it's not a public housing area or anything like that, that's a massive problem, because it means a lot of people are going to fall over on their mortgages, despite them being, suburbs that are fairly expensive. I mean, properties in Point Cook now are like $900,000. Like, to give you an idea, you can pick up Footscray for the same amount of money. Now, sure, it's not a new place, but where do you think it's going to perform better in the future? There's there is no debate in something like that somewhere like Footscray will always outperform Point Cook. No doubt in my mind. Maybe, actually, I shouldn't say no doubt. Maybe for at least the next 30 years. Look, Point Cook might outperform Footscray when, in 30 years' time, when Geelong, the whole way to Geelong and Melbourne is all houses. But for the next 30, I can't see it happening at all. There's I give that almost 0% chance of happening. So that's just something to consider. There are quite a few Victorian postcodes with consistent mortgage stress in them. Finally, not finally, but I do have one other point, should I say, here as well. In Victoria, I'll tell you right now, you've got much higher rents coming. And for tenants or people that rent out there, don't be surprised if this comes as a shock, or just comes out of nowhere. And it's because what is happening is you've got landlords exiting the market in droves, and you can see just here, sparking severe warning for Aussie renters that it's gone too far. The survey found that 42% of sold properties remained in the rental pool, with 37% purchased by owner-occupiers and 25% by first-home buyers. So to give you an idea, that's 62% of properties there are, should I say, that actually properties are being bought by, should I say, people that actually live in them. Now, the issue is, so only 42% of sold properties are remaining in the rental pool. So you've got Melbourne is one of the big, should I say, net overseas migration locations of Australia. The biggest two are Sydney and Melbourne by far. Generally, with 500,000 people coming into the country, or 550 like we've probably got, generally 200,000 each, or roughly something around that, will come to both Sydney and Melbourne. Melbourne. Now, if you've got only 42% of sold properties going back into the rental pool, what is happening is you're getting more owner occupiers and you're getting less investors as rental properties. So what then happens is the pool shrinks drastically and there is absolutely nothing to rent for everyone. That's what ends up happening. So there's a shortage of properties, number one. And number two, the biggest issue is it's the shortage that there is in key locations. So the properties that everyone really wants, yes, people do rent units, but it's not the people you want to rent units. It's the families and professionals that stay there longer term that you probably want to rent your property. And there is a massive shortage of well-located properties to rent. That is the issue. So what is going to continue to happen is you're going to get a lot of investors bailing out of the market, which is stupid. But anyway, because it's a good time to hold. You're going to make all your money in the next 10 years, to give you an idea, in Melbourne and in Victoria especially. Melbourne and Geelong especially, really, in saying that. And what you'll have is more owner occupiers buying, which means less rental stock, which means more competition for properties. And yes, there are tenancy laws, there's all these kinds of things, but there's plenty of things a landlord can do still to get their property and take repossession of their property. They could move into it and renovate it, for example, and then release it out. They are perfectly entitled to do that. Yes, there is, obviously periods where, as I said, a 90-day or so, period where they can't, relet their property. They have to give them notice to vacate, and I get that. And it might look slower than sort of some areas that have just boosted up in rent, but this is going to continue to grow year after year after year. I'm telling you that right now because there are places within Melbourne that are still renting within 10 k's of the CBD for $700 and under $700 a week to rent. There is not a single city in the country where that is still the case. There's not a single one where a detached house with 3 bedrooms you will get for that price anymore. So I'm fully expecting that within the next probably 10 or so years to go up to probably, I'd say something along the lines of $900 to $1,000 minimum a week, something like that, the rent. And it's because there's no actual, should I say, properties on the market as well. And not only that, the thing I should say to people is, when you have more owner occupiers buying and less investors, it actually underlines a very much so bigger boom than you would think. And the reason for that is because owner occupiers hold on to their properties for a lot longer. They generally live in them, they generally work near it, they generally send their kids to schools near it, so they've got an emotional attachment to it. Investors don't. So when you have a high number, like you can see here, of owner occupiers buying in the suburb, the thing is, it underlines an even stronger boom the next time it really booms up. So that's by far what is going on in Melbourne. Once it turns, and it is already starting to turn, it'll really turn for a number of years. Now, that's what I'm expecting to happen. There is much higher rents coming. I don't mean this to piss people off or anything. It's just the truth. This is 1 + 1 = 2. It's very, very simple economics we're going through here. Very, very simple numbers. It's if there are more people looking for homes and less homes available, prices have to go up because they compete with each other over it. And the thing is as well, it doesn't matter how many laws you put in. The very fact of the matter is supply and demand is out the door. Prices must go up. It's as simple as that. You can have rent controls, you can have this, you can have that, you can have the other. If people can't afford the rents and people probably won't re-sign new lease agreements, right? Then what will happen is they'll go in, freshen it up and re-let it out for another $100 or $150 a week. That's what happens. The best way to solve this is actually creating more supply and less demand. It would be by allowing less red tape, more stock to come to market in good locations, and it would be to cut the immigration rate by a major mark. And I'm not having a go at anyone by this. I'm saying this is simple economics. It's simple supply and demand. It's as simple as that. I support immigration to a level that is sustainable. If we could sustain 550,000 people coming in, we had an even housing market, no issue with, should I say, supply and demand, I'd be perfectly fine with it. But the reality is we don't. So that's what needs to happen, but it's not going to happen. So much higher rents are on their way. It is inevitable. But look, that's my summary of things to know before buying in the Victorian market. And if you're someone who's serious about buying down here in Victoria, I strongly suggest you reach out via www.compoundinvest.com.au/inquire. Look, if you're serious right now, or even if you're sitting on the fence or you have your reservations about buyer's agents, I strongly suggest you reach out to me because you'll find out how much I care about people. I'm the most probably transparent person you will meet in this industry. In saying that as well, like what I'd say is also the thing is, A lot of people don't think of the strategy about what they're going to buy before they buy it. A lot of people go into buying in Victoria, for example. They think they'll get this out of it and then they get that because they don't know what to look for. They don't know the laws. They don't know how to negotiate. They don't even know the cool-off laws. They don't know how the deposits work. They don't know how contracts work down in Victoria. They're not the same everywhere. And this is what ends up happening. So again, the strategy is more important than the purchase itself. And if you're looking for a buyer's agent who take better care of you than anyone, www.compoundinvest.com.au/inquire. I thank you all for watching. I look forward to seeing you all in the next one. Thanks, guys.